Hi, morning guys. Johnny, Mr. Forex Fire. I'm gonna try and do a little bit of a zoom and look at Scalp Killer, okay? Because again, the markets are really slow at the moment. It is December. It's coming up to Christmas. We should really be looking to be winding down, in fairness. But we'll have a little look back on some of the other strategies that we do, or what we do have, and I'm just gonna talk a little bit on that and touch base. Now, when we come into the Discord, okay, you've got 3 or 4 areas. Let's just take a look. Just have a look now. All right. We do want to look at the improved mobile, right? So we just want to look at this. So I've got the screen side by side at the moment. However, when you come into the Discord, okay, it's going to show you from an aspect of drop down. We just sort of close everything off. We've got several areas, okay? So again, if I just maximize this at the moment, you're going to see Discord community chat. This is where we do everything premium-wise, okay? Underneath that is the Trade Management Center or the Trade Manager System. This is telling you how to install that. And then we've got the strategies, which is the London entry model, which is a 5-minute entry. We've got Scalp Killer and we've got Boss Money. Now, these here, Scalp Killer and Boss Money, are very much the same product, okay? It's just you've got stabilizers, like when you're on a bike, you've got the stabilizers, and the stabilizers is helping you to balance on the bike, okay? You fall off the bike, you get back on. This is what this is doing from a trading aspect. That your bike overall is obviously going into Boss Money and then being able to trade a naked chart. However, we start from the beginning, which is the easy part, which is going to be identify structure, liquidity, and things like this. And this is where Scalp Killer comes into play. Okay. Now, the analogy that I use with this about stabilizers, this really does help you identify structure points and things like that. Okay, so on the Scalp Killer, we've got the welcome here, we've got the how to install the guide, the strategy guide, the pattern setups for when you're actually trading this. It went to great lengths. Andy Boland went to do these pattern setups and what you need to identify structure-wise. This will come all apparent when we go through it, okay? So I'm going to have a little look on the chart, see if we can sort of look at something, maybe try and get an entry, I don't know. But again, we've just got to factor in that it is December, markets are slow, it's NFP week, just need to be a little bit mindful. Also, I need to jump on a Zoom call for support stuff later on, okay? So if you haven't already looked into this, please do so. Scalp Killer is a good foundation block to be able to start learning you structure points, points of interest, imbalance, and there's loads and loads of stuff in here. And again, we've got examples as well. Okay, so with that being said, I'm just going to go on to the MT4. Okay, so I'm just going to minimize this. And what we've got is, this is the chart. Okay, now the concept is, bottom to top, we use confluence, and the confluence we need to stack together. So we have a major killer peak, we have a stochastic, and we have an MX meter. Okay, now this here is telling us there's a reversal. This is what the major killer peak is. When it's white, it means there could be a reversal coming in soon. So we get an arrow come in. We are also outside of the Bollinger Band path. We need a secondary arrow, okay? When a secondary, we use the higher time frame. When the secondary arrow comes in from here, we can then take it to a lower time frame, okay? Now, we also need to look in the stochastic, 20 oversold, 80s overbought. So we want a double arrow to come in. Again, this here being black on the top, this is purely because the trend is down. So when we start seeing some blues as well, we know the reversal's due to come in. We may start seeing a couple of these columns go blue. We might get a secondary arrow. Now, when we do get the secondary arrow, we then move it down to a 15-minute chart, okay? And what you're looking for on a 15-minute chart aspect is a basic blue coming in. So that's telling us it's going to start to be bullish. We want to see the probability meter changing from black, or from red in this instance, into a green with a bit more of a bullish long, with this seeing long and this being bullish. And when we get that, we wait for a break of liquidity and a pullback. You want the pullback to come in. You want the trend line to change to blue. And then your target areas is liquidity, which resides on these. In this instance, will be a yellow format. Okay. This here is what we call a silic pip reaper. What this does is it's giving you a multitude of time frames: 1 minute, 5 minute, 15 minute, half an hour, 1 hour, 4 hour, daily, weekly, monthly. Now you want the agreement and the analysis to sort of stack up, and this is where we go into confluences. Okay, we can see at the moment we've got 2 arrows here, and we've got a scissors being pulled back. Again, prices want to push up. However, we don't come to the 15 minutes until we've analyzed the 1 hour. Okay. And then we've got the currency strength on the side here as well. So again, we sit in our hands. We just need to watch maybe 1 pair, maybe 2 pairs at most. I tend to like to normally watch the Euro USD. I'm just going to pan out of this a little bit more. And I'm just going to talk a little bit about cyclements of price as well. Okay. So as you can see here, we've got lows, higher highs, higher lows, higher highs, higher lows, little bit of consolidation, create a higher high, higher low, higher high, higher low, higher high. Now you can see as we come up with a trend, you can see we've got arrows. Okay. Now these arrows, they tend to alert us when there is a possible attention of point of interest. Okay. We ideally want to see these arrows come outside of the path. Now, if you can imagine this being the path, the safety net with this whole trend, and we'll go into the colors of this in a bit, this being the path, this being the dotted line and the outer edge, this being the dark forest. So you can imagine when you're young, when you're a kid, you don't like the dark. Obviously, you're coming in the safety of your comfort zone. When you're coming out, this is where you're going to be going into the dark forest. Price is going to be looking to reverse. So again, we use the analogy of we're in the unknown territory. We don't like it. We want to pull back into where we feel safe, where we feel comfortable, you know. So what you're going to see on here, I mean, obviously we've got higher highs, higher lows, higher highs, higher lows. And we do that, we can see there's a trend line. Now, where the terminology cyclement of price comes from is basically you're going to get an uptrend. This is what's happened here. Lows, higher highs, high lows, higher highs, high lows, higher highs, high lows, high highs. And that's just a rough trend line, okay? Now, we look for things what we call change of character, okay? So as we can see here, as we pull this out here, we can see we had a higher high and then a higher low, and then we got 2 other arrows here. Now, this is telling us that price is failing to take the buy side liquidity, which is this candle here. Okay. Now, as we come down and we pull below this area, we then pull down. We had a trend color change. Okay. So this is telling us there's a possible change of character, and indeed, this is what it's done. So now, as you go to create liquidity with a push as we're going up on the uptrend, take liquidity from here, you're going to create it. The creation is the correction, is the pullback. Okay. So take of liquidity, create the liquidity. And when we have that creation of liquidity, this is where the cyclement of price comes into play, because as we start coming back down the other side of the mountain, the creation of liquidity on the upside was the corrections of the take. Okay. So take of liquidity. Why? Because it took this. Creation of liquidity. Creation of liquidity is what it is. It's a creation of liquidity because when we get to the peak of the mountain and we start coming down, we start to target the steps that we created on the push of the initial inertia of the uptrend, if that makes sense. Makes sense. Hopefully it is. And again, we are on the 1 hour. Okay. So we can mark some things up with this sort of stuff. We can see we've got a reversal spike possibly coming in, which is imminently telling us this is why there's a big arrow. Okay. We've also had the scissors. Again, we sit on our hands. Now you'll notice this went from a 36, from a 45 down to 36. So this is telling me that price is wanting to sort of come back to a 0 point and then change this from a short to a bit of a long. Okay, when we do that, it just tells us it's indicating it's coming back up, and it's possibly going to want to come to these liquidity areas. What we need to see is a change of character. We want to see this change blue. Okay, this is going to come down to around 50% of this initial climb. Forget about the highs, the high highs, the high lows, the high highs, high lows. We're pulling back into a Fibonacci level. Just about, we do go from here and we go up to this area here. We come into around about 50%. Now, I've been doing this for a long time, and I've got an eye for certain structure, certain points. I called that 50% that before I even marked that up. So you can see I was bang on the money with that from this high. And as we come up to this higher high, right up on the mountaintop, we are coming back. So we may get a reaction. We're expecting a reaction from the 50%. We might get some form of pullback coming into these sort of lower highs here, maybe back to the 23.6 or maybe just the 38.2. We know we've got that reversal spike. We know we've been oversold. Okay, so we're starting to get a reaction point from here. And if you look to the left, we are actually inside of an imbalance area as well. So again, we're coming in to mitigate into that. Not only that, the full cyclement of price from the low up to that high structure point, it's coming back to a 50% area. Okay, so I'm just going to refresh the template. We come back into this. We'll get rid of all that. So again, we just need to sit in our hands. We need to understand we are waiting for a secondary arrow to come in. We'll wait and see if we can get that. We now know we've got the reversal spike there. Again, we wait for that secondary arrow to come in. When that comes in, we can then move to the next step, which will be the possible reversal to get us in on a buy. Okay, so what I'll do, I'm just going to stop the video here, and then I'm going to patch in when we get that arrow, when we get the secondary arrow. I can then factor in the next point of interest, which will be when that secondary arrow comes in, we can drop it down to the 15-minute and get ourselves ready for the entry. Okay, so that's the first part of this video, looking back on what is the stabilizers of the bike of trading. This is the scalp killer. Let's see if I can get this set up today. Let's see if we can get that entry. I've spoke through the first part of what I'm expecting, what we look at. And these guys, they're a good visual aid to help you understand liquidity as a whole. You know, like I say, we come out of the analogy of the safety of the path. We come out, we get these arrows coming in. They're not always going to give you those push back into the safety area, but there's a good high probability chance that they do this. We coming out to test this path on the forest, as I call it at the moment. I give all these sort of things little bits of terminology. Reversal spike. We now just sit in our hands and we wait for the secondary arrow to come in. Okay, so again, just wait, and then I'll patch on the next part of this video real soon. Just bear with me, guys. Right, afternoon, guys. Johnny, Mr. Forexfire, have just been out. After being knackered, we'll come back in. And we're going to take a look at this Euro USD. Okay, we mentioned earlier, take of liquidity, creation of liquidity, take of liquidity, creation of liquidity, take of liquidity, waiting for the creation of liquidity. We can see now we've got the two arrows. Okay, reversal spike, two arrows. We can drop to the 15-minute. Okay, so we'll go to the 15-minute, and what we're going to be doing is we're going to be looking for the trend. Okay, we'll draw in this trend down here. We've had the push out, we've had this here. I can go down to maybe a 5-minute, and then do this here. Okay, again, identify the area in. You've had a take of liquidity here. We've just here missed the entry, the first entry. We could get a secondary entry here, to be fair. Where would you target? We could target areas of liquidity to the high side here. We could target this one here. Okay, we're just going to measure the pips. This down here is around about 20 pips. Again, that's a little bit too much, to be fair. I would possibly wait for price to come a little further down. We could possibly do an entry based around a limit order. And we're looking for minor areas of support in this instance. Okay, so again, I'll bring this down to maybe something around this level. Let's measure out pippage from here down to here, see. We're looking around about 20 pips. We want to run about a 1-to-1, to be fair, will be okay. I mean, we could target this area up here. If we got in on an entry based upon this area up to there, that would be your 40 pips there to a 20 pip stop loss. So again, we could go to the profit calculator, which again, Forex Fire members, go on the profit calculator. Let's load up position size calculator, and what we're going to do, we're going to see, right, we're looking at the Euro USD. We'll get this in, we're going to see, right, it's a, was it 200k account? 100k. So we're going to see, right, 100k account. Let's have a look. We'll come back out of that, sorry. Go into the Forex calculator, position size calculator. We're going to be seeing, right, the account is 100k. We're going to see lots of 20 pips, risking 1%. Do apologize, guys, because my computer's gone a little bit slow. We'll come back on. Let's get this right. Take your time, John. Forex Fire members. Let's load up. Position size calculator. From there, we're going Euro USD. We're going 20 pips. Okay, we're going 100,000. And we're going to see, we're going to risk 1% on the trade. We're going to calculate. Okay, so this is telling me on here I need to do lots of 5, exactly 5. So I'm just going to go back into this. I'm going to have the position open here on trade setup. Let's have a look. Get this on here. Now, why is it not letting me open up a trade? Euro USD. That's because I've got the wrong markup on here. I've got the, this is on right click, show all, Euro USD. So the price level is roughly, because I've got this marked on the wrong asset, that is Euro USD, 107915. So we'll go into Euro USD. Put this in here. We mark this along. Now this should let me do an entry. So we'll go to trading. We'll go to new order. So we're just going to see a pending order. 1.0715. 1.0695. I do believe so. That will be 20 pips. It's a buy limit. We're going to be seeing volume 5 lots. I'm going to place that in. That there has to be here. 40 pips is 1.0755. Is that correct? 1.07. We'll go here. 140 pips. 108315. Zero 815. Just place that in. In fact, I've done that bloody wrong, haven't I? Do apologize, guys. This should have been up here. I've done the calculation wrong. Cancel that. Do that. Do that. Cancel this. Again, entry. Trading. Buy. We're going to do trading. We're going to do a new order. 5 lots. Pending order. 1.07915. Was that correct? Yeah. We're going to do around about 8310. 1.08310. Stop loss is from the 1.5 down to here. We're going to be looking at 0.770. So stop loss 1.0770. Place that there. There we are there. So we've got our profit. We'll get 1%. We're going to get just around about 2 grand. So we've got that set. We're waiting for the touch entry. We'll see what happens with this. Again, structure-wise, we take a look at what we've done as a rundown. Okay, and I'll go over the parameters of what I'm looking at. Right. So high highs, lower lows, lower highs, lower lows, take of liquidity, creation of liquidity. We're waiting for the 2 arrows to come in. We're outside of the area line here. Reversal spike here. It's now what I said in the last video. It's 0%. It's green. It's predicting towards a long. Okay. Again, we need a little bit of a pullback. Once we get these 2 arrows, we drop it to the 15 minutes. When we go to the 15-minute, okay, we want the blue to turn, the black to turn blue. We've had it here with the arrow system. Trend line here, okay, and if we just filter this into where the reversal spike is, okay, confluence area, reversal spike, oversold. The volume is starting to come back in. Reason why the volume is starting to come back in, we've got the push, okay? Identify where you're at on the fears. Push fears, take of liquidity from here, wait for the pullback into an area of minor resistance or support. We've now come in, touched the entry. We're now a pip to 2 pips into profit. Nice 40, 70, 35. Like you see, you've got your commissions, 35 quid of profit already. We're touched into the entry. We did refine it down into an earlier system. Okay, guys, where we come in, we can see we broke above the liquidity here. Come up, pull back into the support, and now we're waiting or edging our bets that this is going to want to start pulling forward a bit more. Looking at what we can see on the charts, we can see the euro has now took a bit of volume. It's a little bit higher than the USD, and we are in a little bit of profit. Again, guys, you do not just have to go for a 1 to 2. You could come up and target areas like this here. When it's broke that structure there, you could just target a nice 10 pip move. And in fact, I normally encourage just to go for 10 pip moves. We'll see if we can get a little bit more out of this. To be fair, it's just a matter of keeping an eye on the currency strength. Again, we're fluctuating into 2 pips of profit, a nice 60 quid. You could grab yourself a nice scalp out of this, get yourself in and out, quick 100 quid, knock it off, and then you're done. We'll see what happens with this trade. This is the setup. Again, it's fantastic. It's a great system to use. There we are. We're heading up towards the 100 quid. You can see this live. Guys, this system works. It's just about putting the stabilizers on your trading bike, identifying structure, identifying where the liquidity is. You only need to concentrate on the concept of the markets do 2 things. Takes liquidity, and it's got to create the liquidity. What happens in that middle is the entry, okay? And that's what you've got to edge towards. Look at this, guys. As we're talking live, 3.3 pips, a nice 130 quid profit. I'll leave this running. We'll see what happens, okay? I'll see you a bit later, guys. See you later.